Idea that AI will not replace jobs is being put to the test today. First, Chegg announcing it will lay off 45% of its workforce, blaming the, quote, new realities of AI. We should note Chegg is a very small market cap company these days. Then there's the biggie, Amazon. The company announcing it's slashing approximately 14,000 jobs. And while they don't chalk it up explicitly to artificial intelligence, they do emphasize changes from AI and its commitment to invest in the technology. So for more, let's bring in MacKenzie, Sigalos, and Mac. Those are just a couple of the announcements we've gotten in recent days.
Yes, it is. And in terms of this Amazon announcement, it's a really striking contrast because you've got Amazon spending tens of billions of dollars on chips, data centers, and then that big equity bet on Anthropic while cutting tens of thousands of jobs. So today's 14,000 layoffs are part of a broader push to flatten management and move faster, reallocating resources to high-priority bets like its custom in-house Trainium chips, where it's trying to compete directly with NVIDIA. But while Amazon slims down to operate more like a lean startup, it's pouring money into AI infrastructure without the public momentum of rivals like Microsoft or Google. There's no flagship chatbot, no blockbuster AI hires. Alexa Plus has struggled to gain traction, yet the spending continues, even as AWS lags Oracle and Microsoft in deal backlog heading into earnings, and after last week's 15-hour AWS outage that raised questions about its legacy cloud infrastructure. And Morgan, it was just last week that Anthropic committed tens of billions to a cloud deal with Google, not Amazon. So bottom line here is that Amazon is spending like an AI leader, but hasn't shown that it can win. And that gap may help explain why the layoffs are so deep.
Yeah, it's super interesting. And of course, just in terms of some of the other layoff announcements, and I'm not saying that they're all due to AI or not, that we've gotten in recent days, Target, Applied Materials, Rivian, Charter, Molson Coors, and some even at Meta. So it'll be interesting to see what we get in earnings over the next couple of days. I do want to shift gears, though, Mac, and I do want to get your take on the announcement we got from OpenAI today, and thus the announcement, the disclosure we got from Microsoft in the wake of it, too, with that restructuring finally done.
So this is OpenAI clearing a major hurdle because for months, this recapitalization was the one thing standing in the way of two massive moves for OpenAI. So one, unlocking that $40 billion SoftBank-led funding round, and then eventually going public. And Sam Altman, I was just listening to a live stream, and he said that he thinks it's fair to say that an IPO is the most likely path for them, given the capital needs that they'll have. Now, to get there, they had to finalize this restructure. And so one key takeaway here, Morgan, is that Microsoft now holds a 27% stake that's worth about $135 billion. It's the single largest investor in OpenAI.